Good morning, and it's still good morning, even though I'm the closing speaker here. Let me start by saying and asking by show of hands, who of you has a check in their pocket? Anyone? Nobody? Nobody going out, buying a car, making a down payment on a house? Nobody still carrying around maybe the $200 rebate check from Doug Ford? Well, if I had asked this question some 30 years ago, around when Symcor was first founded, the number of hands in this room would likely have been quite high. That was in 1996, when over 2 billion checks were processed. Today, even after decades of decline, still roughly 350 million checks are issued each year, enabling $3 trillion in payments. That's 24% of total dollar payments transactions in Canada still on checks. It's a second only to EFT, but twice as much as debit, credit, and e-transfer combined. And those checks, they are actually processed digitally. The only remaining piece about a check is the input paper. Everything else, from reading, issuing, clearing, processing, verification, is all done digitally. At Symcor, we are not just a payments provider. For years, we have been working invisibly within the financial system, an ecosystem as a digital connector, an enabler to make interactions safer, smarter, and faster. We are the key collaborator at a time in the industry in Canada when we need it the most. Some of you in this room are also collaborators, and I believe more of us must be, now more than ever. So why do I believe that? Let's start with some of the obvious. A mere 3 months ago, would anyone have predicted that our largest trading partner would turn on us? We are inextricably connected to the US, our closest neighbor. Good luck today, Mr. Carney. Yet the impacts of escalations like tariffs and talk of us as the 51st state has put much of that in question. At a time when traditional US-Canadian allyship is in jeopardy, collaboration done right isn't just a soft idea, it's a competitive advantage. In today's hyper-political and economic climate, Canadians must find solutions that make us stronger and more competitive. Solutions that are made right here in Canada by Canadians. Strengthening our economy by building from within and accelerating collaboration has clear benefits, without which we risk falling further behind. Now, I'm not saying we must all collaborate. In this room, we are, after all, competitors as well. But on issues that create shared value, efficiency, security, cost savings, collaboration isn't just helpful, it's essential. In a time when our economy needs every competitive edge that it can get and to drive efficiency and productivity, collaboration between financial institutions, fintechs, and service providers isn't just smart, it's a strategic imperative. With the banking and financial sector being one of the largest GDP contributors in Canada, McKinsey estimates that a total value of $720 billion can be created, amongst other things, by building true economies of scale, collaboration, and leapfrogging digital capabilities. Let me explain the 3 benefits that collaboration unlocks: efficiency, innovation, and security. Imagine if all the financial institutions and players in the payments industry decided to figure out how to move money from consumer to consumer, from provider to provider on their own. It would be a tangled mess. It would create so many issues, including incompatibility and consumer frustration. That's why we don't do it. That's why organizations like Interact and Payments Canada are working together with financial institutions across the country to build a shared digital infrastructure. Or let me go back to 1996 again. when 3 of Canada's largest banks came together and made a bold move to collaborate on check processing. The results were immediate and imminent. The banks collapsed 21 processing sites down to 7, multiple tech platforms down to 1, cost dropped, speed increased, everybody won. And this type of alignment shows something powerful: better products, seamless service, and better customer experiences. Because collaboration drives efficiency, and efficiency creates space for innovation. Innovation is the second key benefit of collaboration. Now, I happen to be a bit of a car enthusiast, so allow me to go slightly off book for a moment. Think of the world's leading auto manufacturers, fierce competitors in every market you can imagine. And yet, 8 of these major players, including competitors like BMW, GM, Toyota, Mercedes, are now joining forces to create a joint EV charging venture in North America called Iona. Their goal? To install more than 30,000 fast chargers along highways and urban centers, leveraging shared infrastructure, common technology, and a coordinated user experience, including payments. For comparison, Tesla has only half that amount of 17,000. But in today's economic climate, where capital is constrained, timelines are compressed, and interoperability is expected, they recognized something critical. Collaboration reduces cost, it de-risks investments, and it accelerates progress. The best ideas don't grow in isolation, they thrive in shared environments. And when it comes to collaboration, it also drives innovation, and growth follows across industries and across borders. So the benefit number 3 is table stakes. Security. What is easier, protecting 10 frameworks or 1? Well, the answer is fairly obvious. When organizations align around shared platforms, it's not just efficient, it's safer, cheaper to secure, easier to protect, and is more resilient against attack. I don't need to convince this room that cybercrime is a multi-billion-dollar problem. Fraudsters don't have any problem and don't care about company boundaries. Instead, criminals and fraudsters are working together to harm everyday Canadians. Criminals have no issue on collaborating, so we should not have any issue to work together to fight fraud. Efficiency, innovation, security. These are the main benefits of collaboration. Let's talk about how it all comes to life in financial services and in payments specifically. What does real-world, large-scale collaboration actually look like? Let's take a look at the powerful example of Australia's scam-safe Accord. In 2023, facing a surge in consumer fraud, the major banks in Australia came together with telcos, payments providers, and government regulators. They launched a joint venture, not to compete, but to align on a national strategy to stop scams before they reach consumers. That meant sharing intelligence, standardizing reporting, and building common frameworks. And in just 1 year, the results spoke for themselves. Last year, a combined loss dropped off by 26%. That's not theory, that's not white paper, that's real-world impact, driven by action, not talk. And here's the point. They didn't get there by waiting for perfect conditions and perfect alignment. They started with a shared intent, protecting people, and they moved together. Australia isn't alone. Around the world, we are seeing financial ecosystems shift from competition only to competition and collaboration. The model is evolving, and it's working. In Luxembourg, 4 banks came together in 2018 and launched LuxHub, a secure centralized platform giving financial institutions access to APIs in a trusted environment. What started as a response to banking regulation has since become a key pillar of the EU banking landscape, helping accelerate digital transformation across borders. In Switzerland, the national infrastructure provider 6 launched B-Link in 2020, collaboration with banks and fintechs to create a shared API framework for secure real-time data exchange. The economies of scale unlocked through these collaborations were massive. Faster deployment, lower cost, greater interoperability. So many countries, so much collaboration. Meanwhile, in Canada, if you apply for a mortgage, you are still compiling PDFs, paper statements, pay stubs, and more. Approvals take days, if not weeks. Applying for a credit card at a financial institution which doesn't already know you is also time-consuming and cumbersome. You have to show your employment history, your income information, and prove your debt load. You're starting essentially from scratch. Why? Because we don't share data. We don't share data easily. Processes are still very manual. Authentication still takes time. I recognize that a lot of the friction is due to the lack of trust. How can you trust a customer if you are not sure they are who they say they are, and their assets and liabilities are actually accurate? Well, we agree that safety is important, but not if it comes at the expense of efficiency and progress. Our countries, other countries, are providing that safety and innovation can go hand in hand. This is why Canadian financial services, payments, and fintechs industry must collaborate, even as we compete. Otherwise, we are stalling progress, especially on open banking and on fraud detection, during a time where stakes could not be higher. This would leave us and our customers and our country behind. We need to move forward. It's not like we don't have powerful examples of homegrown collaboration to build on. Take the Vector Institute, right here in Canada. It brought together the private sector, government, and academia, not in theory, but in practice, to accelerate the responsible development and deployment of AI. That model proved something important. When aligned on purpose, Canadian institutions can move fast, build trust, and lead globally. Now imagine if that same framework, shared resources, shared infrastructure, shared intent could unlock if applied to fraud prevention, data security, and protection of Canadian consumers. In an era where AI is weaponized by bad actors and fraudsters are evolving faster than our defenses, Canada has the opportunity to lead and not just react. At Symcor, we have seen firsthand what's possible when collaboration isn't just a concept, when it's a commitment. Over the past decade, we have worked closely with financial institutions across the country to build the kind of infrastructure that makes data sharing easier, fraud detection faster, and decision-making smarter. And none of that happened in isolation. Our partners didn't just collaborate with us, but they collaborated with each other. Because when the mission is big enough, like protecting Canadians from financial harm or driving large-scale innovation, even competitors can find some common ground. If we want a financial future that serves all Canadians, then it starts right here, right now. Innovation doesn't need to be stuck because technology and because we're afraid to build a future together. Let's stop working alone. Let's start winning together so Canadians can experience a simpler, smarter, and more secure financial future. Collaboration isn't just a concept. It's leverage, it's scale, it's speed. It's the way forward. It's the only way forward. The world isn't waiting. We have the talent. We have the tech, we have the trust. Now all we need is the will. So let's join forces and build that future together. Thank you.